than not, a lot of people confuses between what a payment plan is and what a mortgage loan is. Today, I am going to explain into details the difference, the advantages and their disadvantages, so that when you have to make a decision, you'll be able to make the right decision that will suit your lifestyle and your budget. You are welcome to our channel. If this is your first time, please kindly subscribe, like and share. Turn on the post notification so that you'll be the first to receive our video anytime we upload a video. So what is a payment plan? A payment plan is simply a scheduled payment between the developer and its clients. For clients who aren't able to pay off or pay upfront the amount of money for the house, usually the developers have their self-payment plan. Usually it's a number of years, let's say 3 years, 2 years, 18 months, 1 year, or however or how many months that the developer feels okay to allow you to do your scheduled payments plan. I'm going to give you examples of some payment plans, but for my geographical reasons, I'm in Ghana, West Africa, so I'm going to share with you some payment plan that is most common in our country or that we use often here. First of all, a lot of people ask about rent to own. Rent to own is not common in Ghana. A lot of the developers don't practice it, so we won't start with that. We're going to start with a payment plan where customers or clients have to do a deposit and then pay the rest in a planned manner. So usually a developer might say deposit 30%, 25% or 20%. It's up to the discretion of the developer, and then spread the balance in, let's say, a year, 18 months, 2 years or 3 years. That is the most I have heard of, or I have seen, or I have offered to a client. So for instance, you pay 30% and then the balance is divided by the number of months. Like if it's a year, 12 months, if it's 18 months, if it's 2 years, 24 months, and the likes. So you can either pay monthly or pay quarterly. So once you do the 30%, the following month you can be paying monthly. We'll divide the balance by the number of months available to you, and then you'll be paying, or you'll be paying per every quarter, depending on the agreement that the developer will have with you. And we also have something we call the scheduled or the planned payment. Usually that works hand in hand with properties that are going up for off plan. If you don't know what an off plan is simply having a plan to pay for a house even before the developer starts building the house. So maybe before the developer will start, you express interest. So the developer would agree with you to pay a certain amount when the building hasn't yet started. You pay an amount when the foundation is done. You pay a certain percentage when it's at roofing level, a certain percentage when the roofing is done, and then a certain percentage when it's on substantial finish. You inspect and then you pay the balance. That one is also scheduled, and that one can also give you a maximum or a span of maybe a year, 2, depending on what you agree with the developer. Some of the advantages of having a payment plan is that you have time. If the developer arranges with you or decides to give you a 3-year span, then you know that you can manage or gather your finances such that you would have 3 years to pay off the amount that is needed to buy the house. And then there's this convenience that comes with it, because you know that you are not gathering all the money, like let's say a building which costs about 500,000 Ghana cedis. You are not gathering all that money for the developer, but there is a systematic scheduled payment structure that also gives you convenience. One of the great reasons why you would want to go with the payment plan is because usually the payment plan is interest free. It doesn't come with any interest of any sort. That is, if you are going straightly by the terms and conditions that the developer has given to you, then there's no, usually 99% of the time there are no interest, unless you want to go a little more months or years to what the developer has agreed with you. Usually maybe because it will come because of financial constraints or one or two unforeseen issue or circumstances, you would want to extend it. Then the developer would want to give you or calculate an amount of interest percentage for you to pay. The disadvantage to having a payment plan is that you can't have access to the home. You can't move in until you fully pay for the loan. Usually this happens because with experience, some clients, when you give them the keys and they move in, things happen, they're not able to pay, and then their rights changes. And it becomes court issue and the rest. So to avoid all that, the developer, you'll be assigned your home, so you know this is your home. Yes, you can go to see your home every day, but you can't move in until you are done paying. So that is the disadvantage to having a payment plan. And then, but you also have great advantages to having payment plan. Now we would ask, what is a mortgage? A mortgage is also termed as mortgage loan. A mortgage loan is also a loan that the lender pays for the price or the full amount of the building for you, and you will in turn pay to the mortgage or the mortgage company or the lender bit by bit. So usually most of them have up to 20%, some 20 years, some up to 25 years, depending on your age. That you wouldn't turn 60 years when till that's 20 or 25 years. You still be within the working age bracket. So usually when you see a home and you're interested in the home, you speak to the developer will give you an offer letter. You take the offer letter to the mortgage company or the lender, and then they would want to do something they call pre-assessment to give you like a pre-approval. That is where they will call for your bank statement, your financial standing, and all other things that they will need. They will assess it generally and be able to tell whether indeed you are qualified for the loan amount or you are qualified for them to buy the home for you. Usually the mortgage company will give you up to 80%. So you, the borrower or the client, should be able to pay for the 20% of the house. So let's say you go to see a house that is 500,000 Ghana cedis, sorry. You should be able to calculate 20% of the 500,000 cedis and know that yes, you can pay for that 20%, and the mortgage company or the lender would pay for the rest for you. It is not automatic that the mortgage company would pay 80%. Sometimes, for some reason, when they check your finances and your bank statement, they feel 80% you will not be able to pay because there's a percentage to which they can deduct from your salary, which is lawful. They can't deduct more than what the law requires them to deduct. So usually, looking at your financial statements and other things, they will say they will be able to give you 70, 60, 50 and the likes. Whatever percentage they agree to give you, you should be able to pay to the developer the other percentage, or else you will not be qualified for the mortgage. So usually it is very important that if you want to take a mortgage, you should check if you have any outstanding loans or mortgages. Clear all of those so that you'll be qualified for a bigger percentage to be paid for you, so that you will pay it gradually for 20-25 years or however how many years that you chose to pay for the mortgage. The advantages to having a mortgage is that Mortgage also gives you a long time to be able to pay. You have that flexibility, you have that convenience, and then you pay gradually. The other advantage is that you get to live in the home. You get your keys right after the lender pays the money to the developer. You move in. You live in the house whilst you pay gradually every month to the lender or how you have agreed. The disadvantage to having a mortgage is that it comes with an interest. So there's an interest that you will pay, and usually now with the CD interest, it ranges anything between, let's say, 25 to 30% per annum compounding, depending on the company. So you also have to find out what their interest rates are like, and if it's okay and you can afford it, then you can go in for the mortgage. So usually after all the preliminary examinations are done and they feel you are qualified for the mortgage, they will give you a facility letter. You give the facility letter to the developer, and the developer, you now pay your deposits to the developer, and the developer will now get all the documentation you need. That is the site, the barcoded site plan, the agreements, the offer letter, the title, the everything, and then you will submit it to the lenders for them to do their further assessment, and then they will come for inspection. They will value the house, it will go to Rex, it will go to legal. It's a whole lot, but the company will do all that, and then once they are okay, they will pay the developer, and then you can have your keys and move into your house, and then you pay gradually. Well, a lot of people would also think that having a mortgage is too much. A lot of people, especially in Ghana, are not so, they really do not like the mortgage because they think you'll be paying interest, and then by the time you even apply for the mortgage for 10 or 15 years, the price of the property would have been doubled, and all sorts of things. Yes, I agree. It's fine. You are correct. You are correct with that. But look at this instance where you already live in a home, a rented apartment or house. You're already paying 1,500 or 2,000 Ghana cedis a month. You live in for 100 years, the home will never be yours. However, if you look for a moderate home, and that's too, not looking for a very exuberant home in East Legon or Cantonment or its environs, you go to a bit of the outskirts and you look for a home that is within budget. And then after the entire mortgage calculation, your monthly repayment is something between 2,500 3,000. When you squeeze yourself tight a bit and you do that 3,000 monthly, at the end of the 10-15 years, at least the house is yours. It is yours to keep. You wouldn't pay mortgage again. Even if you are not alive by then, your children can take over and live in the house. So I think that yes, in as much as a lot of us from this part of the world are not so much into mortgage because of the interest and it looks like you'll be paying forever, I think it's far better than renting for a long time. You understand? You do not know where the future or what the future holds. Anything can happen, yes, but in case of any events where you are not able to pay for the mortgage, what a lender does is that they will take possession of the home, sell it, and then take the rest of how much is outstanding and give you back how much the balance to you. So I mean, it's fair. However, in the case where you are able to also finish payments fully, then the house becomes yours. So I'm just encouraging everybody, in as much as when you hear the mortgage and interest, it sounds a bit, nobody wants to owe, everybody wants to be, you want to plan your life properly without owing. Hey, but I mean, it's normal. Look for a home within budget where you're already paying 1,500, 2,000 for rent. Maybe the mortgage repayment will be about 3,000, 3,500 if you can afford it. You squeeze yourself for the next 10, 15 years and then make that payment. And you would have done yourself a good thing by investing in it. I hope now you understand the difference between what a payment plan is and what a mortgage is. So next time when you're going hunting or you're going searching for a home, you'll be able to decide on which of the payment options. That is, if you don't have the money to pay upfront, you'll be able to decide on which of these two options will be great for you, and then you will go and have that dream house you have been dreaming about. If this video has been helpful to you, there's only one thing I want you to do for me. Kindly subscribe to the channel, turn on the post notification, and share. Tell your friend, tell a friend to tell a friend to tell a friend about Ethel and Gifty Sold It, because I believe that the content that we bring here will help you, will help me, will help all of us. We all need it one way or the other, because everybody wants to have that security of owning his or her own home. So until I come to you again with another video, bye.